Things are changing in the real estate market. Hello there. This is Slav, Polinski Homes with App Properties in downtown Downers Grove. And today, joining me is John Rhode of Crossover Financial Group. How you doing today, John?
Good, Slav. Thanks for having me on.
Absolutely, my pleasure. John, why don't you take a minute to tell the viewers a little bit about yourself, your business?
Sure. So I opened Crossover Financial Group. What I tried to create here is I'm a financial advisor, so I have my 66 and my 7 license. So what I tried to create is having the mortgage background of over 25 years. I've tried to create something kind of unique in the fact that I can help the clients really take a financial aspect and really look at the whole picture, not just a rate or a payment or what can I afford. I kind of, back into things and I say, here's the interest you're going to pay over to life on a 30-year loan. Let's look at a 28-year loan. Let's look at a 26-year loan. And let's see what really fits what you're trying to accomplish. And let's look at an overall amortization schedule. And let's say, okay, financially, this makes the most sense. Can I save $30,000, $50,000 by just another $20, $30, $40 in payment? So I look at the whole aspect of the financial plan, not just something that, here's your rate, here's your payment, good luck. It's a little different at Crossover Financial Group.
Sure. I bet your clients really appreciate that extra care that you take to explain to them their options.
Yeah, they do. I think it's something that being in the mortgage business for over 25 years, like I mentioned, I actually started on the inside working out. So I think one thing I can provide is something to the fact that I ran underwriting, closing, post-closing, investor relations. So on my end, I know what they're looking for to get the loan sold. So on that end, I think I know what to collect up front, not the unnecessary stuff, but it prevents going back to borrowers over and over and over and saying, I don't know why they're asking for this stuff. I actually do know why. And I'm trying to make it as easy and painless for the home buyers.
Yeah, that's fantastic. One of the things that's happening now in the real estate market the last couple of years has just been completely, it's been a buzz, right? A lack of inventory. Last year, interest rates were about hovering around 3. Right now, all of a sudden, it's a little bit different. Tell us a little bit about what the interest rates are doing and where they are today.
Sure. So inflation is kind of creating this, right? So we're looking at touching 8% inflation, and it's normally right around 3, but in the last decade, it's been between 1 and 2. So when demand is so high, and that's across the board, that's cars, you're seeing crates stuck in the ocean. So the demand for products is so high, so the Fed is increasing the rates. They're trying to catch supply up with demand. So on our end, we've seen quarter one this year, 2022, where we're looking at, people are overpaying for homes. Rates were low. Now rates increasing. What that should do in quarters 2, 3, and 4 is kind of stabilize the purchase market to where prices come down. We get more supply out there, and we're already seeing it, I think.
Mm-hmm. Absolutely. And where are the interest rates today as we're speaking right now?
Yeah, they're between 5.25, 5 3/8 on a conventional deal. Mm-hmm. And I can just tell you on the interest rate side, one thing that we can provide as a broker, and I've let my loan originators know as well, we're never going to lose a deal to price. We can go, we're going to get the lowest rate for the customer, but also we're able to deal with several different lenders. So we're not trying to fit a borrower in a program at a specific lender and that's your rate. We're actually finding the lenders that offer the programs that are perfect for our borrower, and therefore we shop for rates. So we kind of take that off the borrower. We're going to find the best rates out there.
No, that's great, fantastic. I know for some buyers right now, this is a little bit of a shock, seeing interest rates a little over 5% when not too long ago they were at 3, even below 3. However, one thing to keep in mind, historically, they're still, even at 5.25, 5.5, it's still a low interest rate. I think the first house we bought, Lori and I, we're somewhere around 13%, which right now, this seems insane. But yeah, that's what we were paying back then.
Right. And I think when I actually became an originator right after college, it was, I think, 14%. So right around that. Then it drops to 10, then it kind of got down to 8. But I do believe that they're going to stabilize around 5 or 6 in the 5s and 6s. And with the home prices coming down, the affordability is exactly the same. So whether you're overpaying for a home and getting a low rate, or if you're paying, a little bit less and getting a little higher rate, the affordability really, it doesn't make it less affordable to purchase a home now.
No. Okay.
And especially with the new programs that are out there, they're going to keep coming, but there's arms are going to come back. So we're going to get some adjustable rate mortgages that keep the affordability. We're going to get, some other buy downs. We're going to get grant programs are going to start coming more and more. So I think it's a great time to buy, because owning real estate in a high inflation market, it's a hard asset. And that's kind of what you want to have in an environment where, where supply is virtually not there and demand is so high.
Sure. I know there's some people out there, they're worried that with these inflated prices that we've been seeing over the last year and a half, that we're going to see a real estate market crash, similar to what we saw 15 years ago. However, I read an interesting article today that while the home values are going to stabilize, but they're not expected to go down over the next 5 years. It'll be more of a moderate increase per year. So after this year, what they're expecting is maybe 3.5% per year all the way through 2027. And this is important for people who are still on the fence of buying right now, wondering, should they wait? If you buy a house right now and pay $360,000, based on those figures that I read, in 2027, that same house would be worth approximately $456,000. So it's still right now is a great time to buy, even though the interest rates are coming up just a little bit.
I agree. I think it'll be a true purchase market, which is what we've had for years and years and years.
Mm-hmm.
It definitely was a unique market the last few years. With COVID and everything going on. But yes, we're getting back to a normal purchase market. Certainly a great time to own a hard asset.
Sure, absolutely. And with more homes coming on the market, which we're expected to see, definitely things will stable out, and it'll be more of a balanced market rather than heavily weighted towards the seller. I mean, right now, I'm happy for my sellers, and I feel bad for the buyers. And it would be nice to have more of an equal level playing field for both sides. And I think that's a healthier market. The real estate market can sustain that. These crazy, 10 to 14% price increases per year values, that's just not sustainable in the long run,
Absolutely.
is it?
I agree 100%. I think throughout the rest of the year and next year, we're going to see rates kind of hang around where they're at. We're going to see, the affordability again for the buy downs, for the ARM products. If that, that will increase affordability, and we're going to see a lot more of those products.
Sure. This has been an interesting time. I have a question. How many appraisal waivers have you seen recently with the contracts that you've been working on?
We're actually still seeing quite a few.
Yeah.
We are, yes. It's interesting when the sales price is one number and the actual, contract price or actual appraised value is another number.
Mm-hmm.
So somewhere along the line that has to be made up on our end. But for the most part, we're still seeing a bunch of them. They're pretty lenient if they have credit score is driving everything.
Sure.
Even limited money down, we're seeing more than we've seen in the past. So, but 20% down with your 740 FICO score, we're seeing them for sure.
Sure. Okay. Yeah. I've been seeing them on our side as far as when I represent the seller, when you have multiple offers, more of the offers than not had some kind of appraisal waiver, and maybe not for the entire gap, but it'll maybe for 10,000, 15,000, and so forth. And surprisingly enough, we haven't had to use them because the homes have been appraising out, even if they're selling, 20, 30, 40,000 over list.
Yeah, we've certainly seen that. And again, I think that'll stabilize a little bit as the year goes on, as we get more supply out there. So that only helps everybody. The supply is so down in the first quarter that, unfortunately, cash borrowers, investors were coming in, and at a time of high inflation, that's where you run into the hard assets. And these investors really wanted to get as much real estate as possible.
Mm-hmm.
But now the true purchase market, I think it's in a good spot, and I think we're going to see more supply every week. We're seeing more and more, so hopefully that trend continues.
Yeah, I agree. We're hoping. I think as we move into the summer, we're going to see more homes on the market. Be a little bit later in the year than we've seen in the past, but I definitely think we'll be seeing more homes on the market, and that'll benefit everybody. So, John, I really appreciate all your insights today. Before we leave, what message do you have for buyers today, whether if they're thinking about maybe waiting with these interest rates going up instead of moving forward with that purchase?
I can tell you the perfect scenario on my end, and where I can tell you, being a fiduciary, I'm always looking out for the client, doing what's in the best interest. If I can get the information up front and I can have a pre-qual ready with all updated information, that day that you see the house that you want, that contract comes in, you go see it, sign the contract, I can start shopping rates, shopping program. The more that's done up front makes the whole process so much easier. If you're waiting and you're kind of looking online without a true pre-qual, it makes it difficult, on Slav, on myself, because we're kind of guessing at what's going on.
Sure.
But if we have the information up front, it makes the whole home buying process that much easier.
Absolutely. And I know with some of the deals we've done together that you can get things done very quickly with all the information that you need from the clients.
Yeah, thank you very much. I know we've had clear to closes in 12 days, 14 days, and that's, I have a relationship with my lenders. I was an account executive for years working for these lenders. I know the underwriters, closers, directors. So it makes things easier on my end. They know they're getting a good package.
All right. Well, thanks again, John. There's another real estate market update. This is Slav Polinski Homes with John Rhode of Crossover Financial Group. Make it a great day.